Hello from the World Economic Forum in Geneva. My name is Adrian Monk. Welcome to this launch of the Global Risks Report 2021. I'm joined here in our studio by the President of the World Economic Forum, Birger Brender, and by the report's lead, Sadia Zahidi. Also joined by Carolina Klint from Marsh, by Peter Geiger from Zurich, and Guillaume Bart de Jong from SK Group, who all partner with us in producing this report. So without further ado, I'm going to turn to my colleague Birger Brender to introduce this year's report and get us underway.
Thank you so much, Adrian, and good to see you all again. It was a year ago that many of us met in London. It feels much longer though. I know that one state leader one time said that there can go a decade without any real news, and then you can feel a decade happening in a week. At least I feel that a decade has happened the last year. It's good to be back and also to focus on the risks. I would like to use this opportunity also to thank our partners that will speak later. Marsh McLennan, that has been with us since the start of the report in 2006. And Zurich Insurance, that has been with us for 14 years. And our newest partner is SK Group, for joining the Global Risks Report at a time where building resilience when it comes to risks are more important than at any time. And also to my colleague that will speak later, Sadia Zahidi, that has been responsible for producing the report with her team. Coming back to last year's report when we were in London together, then we had a full chapter in our report related to the risks for health systems not being ready for a pandemic and health challenges. And unfortunately, we have seen that the global health system is under huge pressure. And we also know that the world needs to really wake up to ongoing global risks. The Global Risks Report has been warning about pandemics for 15 years. In our first report in 2006, we also focused on the lethal flu spread by global travel could present an acute threat if we didn't build resilience. And now we see this. We have also warned about pandemics before. And at the time, at the writing now of the report, nearly 100 million worldwide have contracted COVID-19 and more than 2 million deaths. This is one of the deadliest viruses in the history, and it shows that we should pay much more attention to blind spots, but also risks that we have been addressing and building resilience. We also have seen the last year that risks are global and interconnected. Last year showed that risks aren't confined by borders or categories. COVID doesn't know any borders. COVID anywhere is COVID everywhere. We know the same with climate change, doesn't know any borders. And one of the major risks that we are still facing is, of course, the polarized world when it comes to geopolitics and also geoeconomics. Even if you see some light in the end of the tunnel, there are still huge risks connected to the polarized and fractured world. We know that the global economy is at its deepest peacetime slump, even if we're now seeing an early recovery. World output were expected to contract by 4.4% last year, and the recession, unfortunately, will lead to a situation where almost 150 million people will end up in also severe poverty, extreme poverty. This is the first time in 2 decades that we're seeing that the global poverty rate is increasing. And this comes to, unfortunately, one of the main findings of this report and one of our main worries for the coming years is inequalities and societal fragmentation. These are immediate risks. They will bring long-term consequences if not addressed. In the Global Risks Perception Survey, we identified livelihood crisis, digital inequality, and societal cohesion erosion as one of the main risks. These are the basis of the tissue in our society. And we really need to make sure that the growth that comes in the coming years has to be more inclusive, has to create decent jobs, and also has to be more sustainable. If we don't address the underlying growth of inequalities, we will also see new risks when it comes to fragmentations in society. So these are one of the main findings this year that has to be addressed, has to be taken seriously, and is also connected to the response to the economic crisis that we're still in. We're not out of the woods, so whatever it takes still applies, and there is a larger risk of doing too little than too much. And not only focusing on consumption now, we have to invest in the future. We have to invest in global access to also the internet. We have to invest in schools, upskilling, reskilling, making sure that inequalities are not growing, but inequalities are declining. That's one of the main messages today. Thank you.
Thank you, Birger. Sadia, can you talk us through some of the deep dive issues that you've surfaced in this report?
Sure. Thank you very much. Thanks, Adrian, and thank you, Birger. Let me join Birger in thanking the three partners of the report and also the many others who contributed to this. So the Forum's community of chief risk officers, the Global Future Council on Frontier Risks, the Global Advisory Board of the risk practice at the Forum, and of course, the lead authors of the report headed by Emilio Granados Franco, Melinda Koritsky, and Richard Lukács. Let me move on to those results, and perhaps first just share there are 6 chapters overall in the report. We look at this possibility of fractured futures that Birger just talked about. But in addition, we deep dive into what we're calling Error 404, the risks from a widening digital gap. Pandemials, which is this doubly disrupted generation that saw both the financial crisis and now the pandemic-induced recession. Middle power morass, which is looking at geopolitical instability and how middle powers need to fight to still keep a seat at the table. Imperfect markets, that looks at the economic fallout and the industrial shakeout that is happening across sectors. And then finally, a chapter on hindsight that looks at the lessons that we can extract from how we dealt with the pandemic and how that can be deployed towards other global risks. So very quickly on the results, if we could have that first slide up. The first aspect that we tried to look at is the time frames that are involved. So which are the risks that are likely to play out in the next couple of years, those clear and present dangers, which ones come up in the next 3 to 5 years after that are essentially knock-on effects, and then finally the longer-term existential threats. When it comes to the first couple of years, it's very much what Birger laid out. It's not just the health crisis, but it's also the unemployment crisis that has been induced by the recession. It's also the digital divides, and it is also cybersecurity failure. These are all concerns over the next 2 years. Beyond that, you start looking at some of the economic fallout. So, for example, the possibility of debt crisis, the possibility of commodity shocks, the possibility of price instability, and of course, across all of this, youth disillusionment also comes up in the next couple of years as well as after that. And then finally, the 5 to 10 years out, you see those existential threats, and that includes climate change first and foremost, but also concerns about state collapse and also concerns about weapons of mass destruction. If we could move on to the next slide, there's the next lens to this, which is trying to assess the highest likelihood and highest impact risks. And this, it is absolutely clear that if you look at the next 10 years out, the most problematic risk that the world faces is still climate change. There is no vaccine for this. There is only the actions that we can take today to build more sustainable economies. And then finally, a last lens that we tried to apply is, regardless of the impact and likelihood, there are certain risks that global leaders are more concerned about compared to others, and certain risks that have a higher connectivity with other risks. And there, perhaps a couple of key messages that would be important to take away. One, climate action failure still comes up as the most important, most concerning risk, and one which is most connected to man-made environmental degradation. And the second that perhaps is important to look at, this rising erosion of social cohesion that comes in part from livelihood crisis, in part from the environmental crisis, and in part from a generational shift, in particular the pandemials that have been most affected by the current crisis. I'll stop there, Adrian, and pass it back over to you.
Sadia, thank you very much. I want to turn now to Carolina Klint at Marsh. Carolina, can you talk us through how businesses stay resilient given the kinds of risks this report identifies?
Thanks, Adrian. Yes, and I think and hope that the COVID-19 pandemic has changed the way we think about risk. We've all had an opportunity to learn firsthand that low-frequency, high-severity events do happen, and also that their impact can be quite sudden and profound. They're not just scenarios for a tabletop exercise, but something that we should expect and have to plan for. And the pandemic has accelerated trends that have been coming for a long time, and it's clear that improved collaboration and coordination is the only way to improve our collective resilience and capacity to respond to these shocks. So we see many businesses now grappling with how to survive and build resilience, and not only in relation to the ongoing pandemic impact, but they also have to cope with an increased number of cyber attacks, catastrophic climate events, and social unrest. So I think there are probably three critical drivers of this changing risk landscape: political, technological, and societal. And if we look at the political side, misdirected stimulus packages run the risk of increased business zombification, which could potentially harm the sustainability of the economic recovery. This past year, we saw border closures, lockdowns, export restrictions, and companies need to keep an eye on shifts in domestic policies that focus on national security and self-sufficiency, because they could potentially hamper access to foreign talent and investment, and also result in severe disruptions in international supply chains. Technological drivers are also accelerating and disrupting the business landscape, and the rapid digitalization and remote working has exponentially increased cyber exposures too, and created more complex and potentially less secure networks. So businesses should now really take the time to assess changes that were made in the heat of the pandemic and verify that the right investments have been made in networks and controls, and make sure to close if they find any security and governance gaps. If we switch for a moment to societal drivers, which are also creating real pressures on industry, we have picked up that businesses are facing increased scrutiny of their practices. And I think more than ever, consumers, employees, investors expect firms to reflect their values, from company ethics to inequalities and climate change. So what that means is that businesses have to take a firmer and more active stance in these areas to avoid negative impact to their revenue, reputation, capital, and talent pool. So 2020 proved to be the emotional equivalence of a marathon, and the report also picks up on the range of COVID-19 health consequences. And maybe most complex are the negative effects on mental health, connected to lost schooling, altered work conditions, job losses, isolation, and the economic downturn. So what that means for businesses is that they have to recognize that their employees are human beings, and they have to pay attention to the mental health risks from ongoing pandemic stresses. So they should be prepared to provide their people with programs and tools that remove any stigma associated with seeking help and strengthen long-term physical and mental well-being. And I also think in the ongoing war for talent, companies will have to develop policies to ensure flexible working is viable, inclusive, and here to stay. I think it's fair to say that 2020 left us with a renewed appreciation of risk. The pandemic has forced conversations on how we understand, prepare, and manage risks in this fast-changing environment. And I think we can draw inspiration from many successful responses to COVID-19, looking at public-private sector collaboration. I take, for example, the unprecedented speed of vaccine development, or the enormous shift to virtual working, which happened even in heavily regulated industries. But it took people and sectors working together to crack these big, complex challenges. And companies now need to take a step back and plan for the unexpected against this backdrop of a constantly changing risk landscape, and make the needed shifts in strategy and strengthen the organizational resilience and empower their leaders to make quick decisions with confidence. And with the right focus, I think there are opportunities to invest in clean, smart, and inclusive growth, but it is time for action. And the stage is set for a more resilient, sustainable, and inclusive future. Thank you.
Thanks, Carolina. You touched there upon the changes some companies have been forced to make in the digital sphere. Peter, can you go a little more into detail about what that means, what the implications are, and how businesses and organizations are responding?
Yes, sure. I mean, COVID-19 has accelerated and broadened the fourth industrial revolution with the rapid expansion of e-commerce, online education, digital health, and also, as talked about, remote work. And these shifts will continue to transform human interactions and livelihoods long after COVID is behind us. They can provide huge benefits to societies. The response to COVID-19 is actually full of examples. The ability to introduce telework, the rapid development of vaccines. However, I mean, these developments also bring risks and deepen existing and create potentially new inequalities. Decisions were historically made by humans. They're now increasingly made by algorithms that apply machine learning to huge data sets. And the widening gap in digital literacy risks creating a digital underclass, like the digital illiterates. Workers excluded from digital resources will miss educational and employment opportunities created by this global shift into a digital economy. Automation was reshaping labor markets, I mean, as long as we know almost, for many decades, and it may replace as much as 85 million jobs in the next 5 years. Whilst the digital economy, on the other hand, may create 100 million jobs, education and lifelong learning can increase digital literacy and play a critical role in closing digital divides. Unfortunately, public spending and policymaking capacity to reduce digital skill gaps will be limited after COVID-19 because we used a lot of the energy and the firepower. What worries me is that many of the vulnerable workers will likely prioritize keeping their existing jobs or quickly finding new employment over dedicating time and money to retraining and developing the much required new digital skills. Because in developed and emerging economies alike, the rapid shift to remote working is expected to create long-term productivity gains, but it risks creating future gaps between the knowledge workers and those who cannot work remotely. And then another side of the accelerated digitalization are the widespread fake stories and conspiracy theories, the so-called infodemic of misinformation that hinders civic debate and consensus on critical political, public health and environmental issues. Misinformation is therefore increasingly threatening civil liberties and democracy. Societies are becoming more disconnected and divided. They find themselves increasingly polarized and bombarded with misinformation. But a regulatory backlash to combat this outcome actually risks further disconnecting people from political elites. governments across the world are ramping up protection for consumers and increasing regulatory pressures on the digital markets in response to the potentially harmful societal impacts of digital dependency and influence. And whilst regulatory actions will protect consumers from the naturally more monopolistic nature of large tech companies and platforms, a regulatory so-called tech clash risks internet restrictions, information censorship, and actually risks our hard-won personal freedoms. So as we see more division and disparities being created by the pandemic in an already divided world, I mean, we need to make a concerted effort to bring the benefits of the fourth industrial revolution to all people on the planet, regardless of their economic situation, race, gender, or ethnicity.
Thanks, Peter. Guillaume, we've seen that some societies who've experienced some of the pre-pandemic crises, for example, the SARS crisis, seem to have responded better this time round. Can you speak to some of the ways societies have dealt with this crisis and also how societies can respond better to the risks that are outlined more broadly in the Global Risk Report 2021?
Oh, thanks for your question, Adrian. Yes, I think, look, 2020 unfortunately underscored very deep vulnerabilities in the fabric of our societies and our economic growth model. And as we think about building greater resilience, to your question going forward, I think there's two key challenges that stand out. The first is how we address the economic repercussions from the pandemic and how we shield ourselves from future shocks. So last year, we've seen governments flexing their fiscal muscles. Now, the good news is that those countries that had space for stimulus managed to blunt the economic damage to some extent. In Asia, for instance, China, Japan, and Korea's GDP outperformed that of Indonesia, India, and the Philippines, countries where large current account deficits constrained their ability to borrow. Okay, now the bad news is that global debt levels are rising fast, and we may be sleepwalking into the next sovereign debt crisis. So emerging countries' debt to GDP ratio is now set to rise from 60 to 70% in the medium term. This means that these countries will soon be on the hook for billions of dollars in added loan repayments. And this could become a real concern if declining output continues to damage the tax base, if the dollar starts to appreciate, or should there be an external demand shock in China, for instance. Let's not forget we've already had 6 defaults in 2020. Now, compounding this risk is the continued pumping of liquidity from central banks, because this could lead to asset bubbles. So yields on emerging market sovereign bonds have already fallen quite dramatically. This means that investors worldwide are snapping up their debts and they're betting on a fast recovery despite the deterioration in public finances. We're now seeing emerging sovereigns issuing currency in long-dated bonds. This includes Peru's 100-year bond sale in a country that has one of the world's worst corona mortality rates, and that has had 3 presidents, must be said, in less than 2 weeks back in November. Which brings me to the second and related challenge, which is social cohesion and its impact on the effectiveness of public policy. Because the deterioration in public health and the countermeasures imposed by governments have really tested social resilience to breaking points. Now, the pandemic, and this is beautifully highlighted in the report, but the pandemic has exacerbated pre-existing social fractures and divides. To name a few, we have growing income inequalities, unemployment, access to public services, and growing digital and generational divides. And these fractures are undermining the effectiveness of public policy at the very moment when we need governments to return center stage. Meanwhile, many governments have pushed through emergency measures and packages with little democratic accountability. And in the West now, you have a full-blown legitimation crisis, which is where the citizenry are losing faith in the ability of their institutions and their institutional framework to address their needs. Now, we're seeing this, and Peter touched upon this, with the polarization of political discourse, something which is, of course, reaching boiling point quite spectacularly in the United States. And this growing distrust is something that governments must address. especially as they grapple with the scissor effect of declining financial resources and growing needs. So clearly, greater involvement from the private sector will be required to plug the funding gap and to address the damage from the pandemic. A funding gap that grows to $1.7 trillion if we are to meet the UN SDGs, according to the OECD. But, and I'll finish on this point, the contribution from the private sector cannot just be financial. It must also be technological. And a learning point from the pandemic is that societies that digitized early tended to perform better. Digital technologies allowed for a smarter and a more centralized response to the pandemic. And I'm thinking of track and trace applications, better communications of directives from governments, a greater continuity in public services, including schools, and Carolina touched upon this point, and the minimized labor disruptions during lockdowns to businesses, for instance. And I think that's a real learning point, at least from Asia and from hyper-connected economies such as Korea, which, by the way, has the world's highest internet penetration at 96.2% of its population. Thank you.
Thanks, Guillaume. Great opportunity now to take your questions. I would say, given that this is a virtual environment, in a physical environment, if we were all in the same press conference room, I would be able to exchange meaningful looks with panelists and understand from their meaningful replies whether or not they wanted to answer. In this case, we're all on Zoom, so I just ask you, if you're a panelist and you want to come in and pick up on a question, please just raise a hand, and then I can see that you want to come on in, and we can go over to you. But I want to start by going to the Global Trade Review, Maddie White. Maddie, your question for the panel.
Yes, thank you. So we saw huge disruption to trade in 2020 amid the pandemic. So borders were closed and protectionist measures were imposed. And I'm just wondering, how will the risks outlined in the most recent report impact global trade, do you think?
Thanks for that, Maddie. I'm going to turn first to Sadia Zahidi, who, in addition to leading this report, also heads all of our economic work here at the forum. Sadia.
I'll keep my response very brief, Adrian. I think there's a mixed picture here. There's obviously a tendency in the short term for countries to look inwards, for businesses to try to change the current nature of their supply chains. But perhaps the key message here is that we know that trade and open borders are better for all economies. We know that they're important for building in more resilience. We know that they're important for lifting people out of poverty. And there is no choice but to move towards a return to more openness and trade. And maybe let me just add one other piece here. This is particularly important for developing economies. And we know that we're looking at an outlook where poverty levels are rising and where there will be long-term damage to a number of developing markets. And so the return to trade is critical.
Birger.
I just want to underline the importance of what Sadia just said. There will be no full recovery without resuming back to a situation where we also see growth in trade. And we have to do everything that is possible to get trade negotiations back on track. And we have to change the notion, not beggar your neighbor, but prosper your neighbor. By trading, it's a win-win thing and not a zero-sum game.
Thanks for that. Perhaps we can go to Brian Davis at Petroleum Review for your question, Brian.
I'm muted, I believe.
No, you weren't muted, and now you are muted. So we need to hear your question, Brian.
It sounds like a frightening situation, but what does the panel think needs to be done to accelerate the energy transition?
Thanks for that. Perhaps I can turn to our industry guests on that question. Carolina, that question about the industry transition, how can we accelerate it? What needs to be done?
Well, what needs to be done is clear. It's increased collaboration and really looking at interconnectivity. Like, how do we direct stimulus packages towards really supporting a recovery that really highlights, the need for a greener recovery. So I think that's really the first thing that I would highlight.
Peter.
Yeah, and I think we can, if there is one thing we can learn from the COVID is what happens if we unleash the ability of humans to innovate. And that's the piece I'm a bit missing in the energy transition, where we try to sponsor the right technology for in 20 years today, rather than sponsor the innovation as such. We would never have ended up with the number of vaccines without unleashing that intellectual power. And we should do exactly the same for the energy transition.
Guillaume, can I just turn to get your view on this?
Sure. Actually, Adrian, if I could turn your attention back to the previous question, there was something that I would have liked to comment. The previous question, which was about a multilateral trading system, our global supply chains, and which ultimately was a question about economic integration. I think it's fair to say that recovery from the pandemic and the economic fallout is unlikely to see the return of the previous wave of hyperglobalization that we had. This was very much a global crisis, but it did not prompt a global response. What we saw instead was a slight breakdown of globalization with, for example, the demise of global travel and the paralysis of links and interfaces between countries. And I think it's important to remember that this was accelerated by the pandemic, but it by no means it was created by the pandemic. These trends pre-existed Corona. The challenges to globalization are not new, and we've now seeing a re-emergence of nationalism, protectionism, and challenges to the economic hegemony of the United States. This is an increasing theme going forward. Okay, and we also had, the increasing threat of decoupling between the United States and China. So these were threats to globalization that pre-existed the pandemic. But what I do think we will see now is an attempt to remodel globalization with the move towards a regionally based world economy. And that's really my point. And one that better balances between national and international interests, between efficiency and the resiliency of the global economy and its supply chains, and that better balances between growth and equity. And I'll finish with this. I think regionalism and economic regionalism as a model of economic integration may emerge as an attractive and very attractive political and economic halfway house between an overextended hyperglobalization, one which has failed the global stress test, and the rise of nation states, which also comes with its own challenges and problems through the risk of protectionism and conflict.
Thanks, Guillaume. Turning to London and Philip Aldrich from the Times. Philip, welcome. Your question. We just need to unmute you, I think.
Yes. Can you hear me, Adrian?
Right, I can hear you. Happy New Year, by the way.
Yeah, great. Okay. So it's really a couple of quick ones. I think Peter said that governments have used their firepower up, but also there is this big requirement for governments to invest in their economies. Whether it, one of the panelists pointed out education. So how do you square this? How do governments invest at a time when they've basically used up their ammo? And companies, another panelist was saying, companies need to plan for the unexpected, build in more resilience. But that would suggest that we would be operating a far less efficient economic model, which would come with lower growth. And so I just wondered if the panelists could address these kind of conflicts built in the analysis.
Two interesting questions there. Have governments used up their ammunition, and how does that leave them when it comes to investing in these possible green solutions? And also, does resilience come at a cost? Does it mean that we're building in excess capacity or doubling up on resources? Perhaps I can start with you, Sadia, on that.
Right. So on that first question, It's a question of time frame. So in the short term, governments have sort of, applied a blunt instrument to the current crisis, which is massive amounts of stimulus to try to deal with the current problem. However, those are the appropriate, but still they are stopgap measures. What needs to happen is a shift towards a new model of growth and development, and that model needs to build into it a greater focus on inclusion, and that includes education, safety nets, ongoing lifelong learning. It essentially includes a set of things that invest in the human capital of an economy. And the second aspect is investment in green and sustainable technologies and energies. And that's the other area where there needs to be a new model of growth. And that's, I think, connected also to what Peter was saying. We need to focus on investment in those innovations and not simply providing the basic stopgap measures. And that's a shift that most governments will need to tackle in 2021.
Thanks, Adi. I'll come to Peter and other guests in a moment. Birger, you've many years of experience in government of making these kind of hard decisions. How do you think governments are going to square that particular circle?
So the stimulus that we see on the table today, close to $12 trillion US, we haven't seen anything like this since the Second World War. There is still more stimulus to come, and there is still more of the 12 trillion to be allocated. And we are already seeing that governments are now pivoting from short-term consumption, furloughing and etc., to investments. And those investments we see is in the digital transformation and also in a green transformation to lower carbon economy. So this makes sense, and I think we also then down the line, when there is not such a fiscal muscle left in many countries because there is not that much space left, the private sector also will play a major role. So we will hopefully see more public-private cooperation and partnerships coming. To the second question about the cost of also building resilience. It's true that building resilience can have a short-term cost, but I think overall, though, that the cost of inaction far exceeds the cost of action in this case. I think we've seen it now, how unprepared we were for the pandemic. I think also on climate change, the measures that we're now taking, even if the short term maybe be a price to it, I think the longer term price of not doing anything far exceeds. So these are important elements to bring with us in this discussion.
Peter, do you share that analysis that this is a cost that we have to bear, this cost of building resilience back into our economies?
It's actually a matter of the time perspective. As a risk officer, I would suggest that building resilience lowers the overall cost. Because I mean, we've seen that we've been perfectly optimized for a sunny day, and then rainfall came in, and that's going to happen time and time again. And building resilience will actually lead to lower cost over time, because it's always cheaper to build a dam than to pay for the flood, always. And I think it's a very short-sighted perspective that we've taken in many of the processes that we've optimized to the nth degree. And only in a very short term and narrow perspective, under the assumption of perfect stability in the world, the costs are lower. If you take a more holistic perspective, resilient processes will be more cost effective.
Thanks for that. Carolina, Guillaume, I'm sure you'd probably echo those sentiments. Anything you want to add in on that answer before we take our next question?
No, I just want to agree. I mean, companies becoming more resilient is not inefficient. I think we need to just think about it differently. And I do see, I mean, we definitely see companies wanting to build resilience and really take in that sort of sharehold, like the social capitalism as well, and respond to the changing landscape that we see. So I just want to agree. More resilient is not ineffective. We have to build in slack in order to meet the challenges of tomorrow.
Thanks for that. Okay, I'm going to turn to Damien McElroy from the National. Guillaume, sorry.
Sorry, apologies. I can only echo what has been said thus far. And I think instead of framing this as a cost, we need to think of it as an investment. And I think it's at this point, I'd like to bring in technology, because it's very clear to us, at least, that technology and the deployment of 5G and AI, for example, can emerge as a formidable engine of growth that can also help us to improve our resilience going forward. And I think I read a recent survey from McKinsey that highlighted that high-performing companies doubled down on their AI investments during the pandemic, despite the economic hardship. And the number of successful use cases deployed at enterprise scale is rising very fast, especially in the telecoms, high-tech, and automotive industries. And this is something which chimes with our own journey at SK. We have, for example, introduced AI, of course, at a cost, into our EV battery manufacturing processes and our smart factories in the EU and the US. So our AI today is able to harvest data from thousands of sensors across our assembly lines and to make real decisions that optimize objectives and constraints, decreasing our carbon emissions, maximizing throughput, maximizing safety, and so on. So I think it's not just a cost, it's an investment, and it can unlock significant growth in the future.
Thanks for that. Damien McElroy from the National. Damien, your question, please.
I wondered if you could talk about the need to basically build resilience in some of the areas that has been most tested by the pandemic: international supply chains, the health service that you talked about earlier, getting the vaccines out, having global passports, vaccine passports, etc. What kind of international cooperation do you think needs to happen to ensure that those elements are rebuilt from the damage that has occurred?
Thanks for that. You mentioned travel there, and that's something I think where the World Economic Forum has played a role. Birger, perhaps I could just turn to you on some of the global cooperation that's needed to implement some of the responses to the pandemic and these risks that we've seen emerging in 2020.
Well, thank you, Adrian. Just after the pandemic was a fact in March, we built at the World Economic Forum a platform for initiatives between public-private on fighting the pandemics. We have now 42 initiatives on this platform. One of them is also then developing this passport, safety passport, so you can then resume travel in coordination and in collaboration with the travel industry. I think we also have seen that the pandemic has led to challenges not only for the global value chains, but also for the regional value chains. And here we have to build much more resilience in the future. And we have seen that there are some changes and adjustments that will happen as a reflection of the pandemic. But I think, Sadia, you also worked on this topic of resilience related to the pandemic.
Sure. I think overall, one key lesson is that global cooperation needs to continue and is an absolute must if we're going to resolve not just the health-related challenges, but also some of the fallout from it. So, for example, over this last year, we've been working with multiple countries and multiple companies on how to still, in the midst of this downturn, manage to provide the right kinds of investments on reskilling and upskilling their employees, and how governments can work across sectors on redeployment of those employees into the jobs of the future. Now, this is an area where that cooperation may be around methods and ideas rather than on tangible physical products, but is absolutely critical. And that's part of what we've been taking forward.
Thanks for that. I want to try and get as many questions as we can. Perhaps we can go to two people with questions. Marie Villeneuve from France Culture and Yolanda Morales from El Economista in Mexico. Perhaps we can have Marie and then Yolanda, and then we can get some responses from panelists. Marie.
Yes, hello. I was wondering if you had already put infectious disease as a risk in your global report, and last year, for instance, where it was And I'm asking this question because now this risk is number one, but maybe 5 years ago it had not been expected. So does it mean that the global risk reports that we can make never really are never really able to shape the future or to help us see what are the real risks that we have?
Thanks for that. And Yolanda, your question, please. No, we haven't got Yolanda available to go to. Great question from Marie there, going back to the issue that I think everyone involved in producing risk reports faces, which is every year we have strong warnings, but do we have strong responses? Sadia, you've been looking at this report and the way that pandemics have featured. Can you give us an idea of a response to Marie's point?
I mean, in addition to infectious diseases being part of this global survey for several years, you know, the 2006 edition, which was the first edition of this report, looked at the possibility of a lethal flu spreading due to global travel. In 2016, we looked at the possibility that Ebola may not be the last serious epidemic. In 2018 and in 2019, we looked at the development of biological threats and antimicrobial resistance. And then obviously in 2020, just at the very beginning of this crisis starting, we talked about how health systems were facing threats from multiple fronts and were essentially too weak to deal with a major load. Now, we've seen quite a bit of that come true. And I think what's important here is a reminder to the world that we absolutely must face these long-term risks and threats head on. There is no better way to deal with this than to prepare. You know, Peter put it in a very interesting way. It's always better to build the dam than to deal with the flood afterwards. And we've seen some of that fallout happen. And this is why what the report is pointing out today, which is erosion of social cohesion, livelihood-related crisis, concerns about future debt crisis, and obviously concerns about the big looming threat of climate change. This is the moment to start dealing with these issues today.
Thanks for that. Perhaps I can get some response from our industry panelists. Carolina, are you seeing the people you work with taking reports like this and the warnings of things like pandemics more seriously, given what we've seen in 2020? Or are you concerned that with all the other risks that are contained in this report, people will carry on just being focused on the 3-month quarterly horizon?
Well, I think there is a risk, but back to the point, the survey has raised the topic of global lack of preparedness for pandemic and virus-related risks. I think in 5 of the last 6 years, and we definitely need more intense discussions and engagement around some of these issues of global concern to really ensure that we take action now. And back to the points I was making earlier, I think it is clear that high impact, low likelihood risks do happen, and we cannot treat them as merely scenarios for a tabletop exercise. We really have to start planning and focus on building resilience to future black swan events, so that we're able to withstand the impact of the next big challenge, because the next time it won't be a pandemic, it will be something else.
Guillaume.
I can only agree with what has been said thus far. As a major industrial player with operations across the world, we have to plan our investments many years in advance. And here we're talking very significant investments. And therefore, we must take a long-term view on some of these risks. And we're also mindful that our operations are embedded in communities and that they're embedded in an environment, which is why we must take a long-term and sustainable view.
And Peter, you're used to this annual stage and issuing warnings like this. Has this pandemic given them a massive reinforcement of people taking seriously not just those health risks, but all the other suite of risks that we're identifying in this 2021 report?
And I think that's the key lesson I would want to take away. I don't read the report as a crystal ball that tells me about the future. It gives me a guide on the assessment of a large population. However, the key in risk management is to prepare for the unexpected. And all the risks that we have in the report are kind of expected universe already, but we need to leave room for the things we don't have on the radar. And in answer to Carolina, I don't think a pandemic is a black swan. It's way too frequent. There is much more infrequent things that are not necessarily worth worrying about specifically, but generally good risk management will create resilience to a broad range of potential outcomes. And I think that's the key, and that's the value of the report, is the process, not the prediction.
Thanks, Peter. We can go to Larry Elliott, I think, from The Guardian. Larry, your question, please.
Good morning, Adrian. Morning, everybody.
Good morning.
There's always a temptation when bad things happen for longer term things to be put to one side. So I just wondered whether the panel thought there was a risk that the pandemic will delay action on some of those longer term existential challenges that the report identifies, or whether they think it will be a wake-up call, and what would make it a wake-up call rather than an excuse to delay action in areas where it's crucial over the longer term.
Thanks very much. Borge, you've seen some of the world leaders responding to some of the issues aside from the pandemic, particularly climate, and we've got climate change, big meeting this year in November coming up, where a lot of leaders will be gathering to put that on the world's agenda. Are you seeing a renewed interest in looking beyond the kind of next term horizon into the 10, 20-year viewpoint?
Well, thank you, Adrian, and thank you for this excellent question. Fortunately, I think, though, we're seeing bigger interest now among also world leaders to address the longer-term challenges and risks, and especially with climate change. If we see in this report that we have presented today, environmental risks topped long-term threat by likelihood for the 5th year in a row in the survey among world leaders. And we will probably then tomorrow have President Biden at the inaugural address then announce that the US is rejoining the Paris Agreement. And we are seeing also that stimulus, as I already touched on, is now used to accelerate the green economy and the transformation into a low-carbon society. But of course, there are dilemmas here too. This is to an earlier question about the energy transition. There is still 1.3 billion people not having access to basic electricity in the world, and how to make sure that there is access to electricity and at the same time we get the CO2 emissions down. So the answer to the question, I think the pandemic has been really wake-up call when it comes to dealing with risks and future risks. And among the future risks that are the most worrisome today is, of course, climate change.
Thanks, Borge. I want to try and see if we can get to as many questions as possible. I want to go, if we can, to Vienna, to the Wiener Zeitung, Thomas Seifert. Thomas, can we have your question, please?
Yes. You hammered it home again and again. Risk number one is still climate change. And also, maybe let's not forget that the pandemic was to a degree caused by environmental degradation that puts us in ever closer contact with species that we wouldn't normally not be in contact with, and exposes to zoonosis like the SARS coronavirus that we have now. But you stress climate change. But how do we alarm the public and the economic elites and the political elites to a slow burning fire like climate change? After all, it offers less drama than the pandemic that we're seeing right now. So how do we deal with that? That we get the sense of alarm and the sense of action that we see here, like also Peter said, we have immense cooperation in the field of science, etc., and there is action. Even we lacked cooperation, international cooperation. But how do we get there with climate change, where people still think, well, okay, it's getting warmer, winter is getting warmer, but it's still far off until it isn't. Thank you.
Thomas, thank you. Peter, you talked about dams and dam building. How do we get people excited about dealing with dams rather than about building dams rather than rushing to deal with floods?
It's actually almost against human nature. Humans are kind of very fight or flight focused. Dealing with immediate risks, we're very good at. With these slow burning fires, we're not nearly as good. And I think that's why we find it so hard as a society to deal with climate change. And I mean, if there were a silver bullet, I would have spent it a long time ago, I tell you.
Yeah. Guillaume, is there a method that businesses can use perhaps to get some energy behind some of these slow-burning risks that Thomas identifies, particularly climate change?
Well, at the risk of frustrating the person who asked the question, the gentleman who asked the question, actually, I would say corporate players are under incredible stress to meet their climate obligations. I mean, we are under pressure from virtually all our stakeholders, governmental stakeholders, our employees, our shareholders, and our stakeholders. And this is very much something that we have in mind. Yes, the pandemic suddenly emerged, and I'm not going to say out of nowhere, because the World Economic Forum has been warning us about this for quite some time. But I wouldn't say that it's, at least from what I can see in Korea, has definitely shifted the question of climate change to one side. It hasn't de-escalated it in this way. I think a number of companies, at least in Korea, are taking active steps. We have ourselves joined the RE100 initiative, which was launched by the British NGO, the Climate Group, in 2014, which is for us to meet 60% of our power consumption from renewables by 2030, 90 by 2040, and 100% by 2050. And a number of our affiliates have pledged to join this initiative. Even there is no system in Korea at the moment that allows companies to purchase renewable energy. So we have made this commitment, and we're going to have to try and work out how we're going to do it.
Thanks, Guillaume. And Carolina, if I can just turn to you. I mean, are we seeing sort of real steps being taken by businesses and organizations and governments? Or are we still seeing a lot of greenwashing and hat tipping in that direction, and not real measures that are really going to move us forward?
I think COVID-19 briefly changed the climate conversation, because people stopped traveling, and the carbon footprint for many decreased quite significantly. But it's also important to point out that while individuals may have stopped traveling, cargo continued to be shipped around the world, and manufacturing has continued. And I think the climate change conversation is far from over. I also believe that COVID-19 increased awareness among boardrooms that those low probability but high impacts events, they do actually happen, and that no business can afford to ignore them. But at the same time, we do see regulators pushing hard for corporations to take more responsibility, and also to measure their climate change mitigation in a more transparent and public way. And I also think the opportunity here is for companies to prepare for that increasing pressure on climate issues from all of their stakeholders. So it's really back to that shareholder focus again, and looking at sort of how a lot of stakeholders want companies to reflect their values. And I think the climate-related risks are going to continue being in focus.
Carolina, thank you very much. I think we've got time for one last question. I'm going to turn to Hui Wang of Xinhua News Agency, China. Hui, can I get your question, please?
Okay, thank you. After a very difficult year 2020, I wonder how will the panelists forecast the performance of world economy in 2021? Thank you.
Thank you very much. Well, we always say that the Global Risk Report is not a crystal ball, and that it's trying to look at the 5 to 10 year horizon and a little further beyond. But since you've asked to put our panelists on the spot very quickly, Sadia, I'm going to start with you. Global economy 2021, we're in January. What's the prognosis from where you're sitting?
Well, that's a big question. I will try to answer a part of it. I think the COVID-related crisis has accelerated a lot of the trends that were underway. So there is greater automation, greater digitalization, greater adoption of certain technologies than ever before. At the very same time, there are digital divides that are very stark. Half of the world still doesn't have access to the internet. Many parts of the world population still don't have the skills to be able to work in the digital economy. And so to some extent, you are seeing an acceleration of previous trends, as well as greater visibility of some of those previous fractures. At the same time, there hasn't been a better opportunity than this one to try to proactively shape the economies that we want as we head towards a recovery. And that means building inclusion and building sustainability into this next wave of effort by various governments. And you'll see much of that come through at Davos Agenda Week next week, when leaders focus on how to build back the right kinds of economies, how to put in place the net zero transition, how to ensure that we are not just deploying more of these technologies around the world, but also providing the right kinds of governance systems and cooperation around it. So I would say that we certainly have a rosier outlook than in 2020. That's the prediction of many international organizations, but it's up to us how we proactively shape the quality of that future growth.
Thanks for that. Just a quick whiz round our panelists as we're pretty much out of time, but just a sense of optimism, pessimism, your views on how the economy is shaping up. Perhaps first turn to Asia. Guillaume, optimism, cautious optimism perhaps there?
Look, as you said, nobody has a crystal ball. I would, however, say there's a couple of risks on the horizon. The first key one I've already talked about at length, which is sovereign debt crisis. We may be sleepwalking into the next sovereign debt crisis, and we could see more defaults in emerging markets. The second thing that I'm particularly worried about is the decline in FDIs. And as a multinational enterprise, we're very concerned about this. If you look at the World Bank Pulse survey, you're going to see a very sharp decline in FDIs in 2020 and also coming into 2021. 2/3 of respondents saw a decline in investments, and more than half have seen reduced employment in overseas affiliates. So that is something that we're worrying about. And just to finish on the small point, the absolute level of world growth is trivial in a way. I think the bigger problem is unequal growth. I mean, if you have multi-speed growth, then that could unleash all sorts of nasty shocks that could reverberate through the world economy.
Thanks for that. Peter, any immediate, clear and present dangers for the world economy in 2021 that you're seeing from Zurich?
Well, let's not forget, we're not out of the woods. I mean, the crisis is still there. And so any even short-term predictions are very, very uncertain at this point in time. And so far, consumer sentiment has held up quite well a lot around the world. But we're lacking experience with that type of economic crisis. And so it's very hard to predict what's coming, and then the reaction to that should be to leave more options open, because there is probably a broader range of possible outcomes, even for the year we're already in.
Thanks for that. Carolina, what's your perspective looking at 2021?
So I agree with Peter. I mean, we have to get the COVID-19 situation under control, and that should be the first and immediate focus. Get the vaccines rolled out and address the current crisis. But at the same time, I'm optimistic. I mean, there are opportunities to transition and invest in clean and smart and inclusive growth. And I really want to believe in a more, better, more resilient and more sustainable and also inclusive future. So I want to say that I'm optimistic.
Thanks for that. Lastly, over to you, Borga. We're looking at issues like climate change, like jobs, but it all comes back to the economy in the end. What's your perspective as we move into the big week of the year for looking at these kind of macro problems, Davos Agenda Week?
No, it is a very mixed picture that we're seeing. On the positive side, I have to say that even if we did not come together in the G20 context like we did after the financial crisis in 2008 and agreed on the monetary and fiscal measures that were unparalleled, the effect of the world launching a stimulus of $12 trillion is unparalleled. So even in a fractured, polarized world, we have been able to come up with measures that were necessary, but of course down the road also creating new challenges, as also Guillaume touched on. But I think there was no alternative to the stimulus. We saw a contraction of the world economy with more than 4% last year. Hopefully, we will see more growth now, but there will be countries that will not come to a pre-COVID level before 2023, 24, 25. And there is like this two-speed economies. The second largest economy in the world, China, grew maybe with 4% last year. So they weathered the crisis very well. We also seen other Asian economies like that. In Europe, we're still struggling in the middle of a COVID crisis, and there is more stimulus needed. What I would say also to this year's risk report and to the team looking at new risks on the horizon, let's not forget what come out of this report, that we are very worried about the growing inequalities and inequalities in the world. And we have to find ways of closing this gap without hurting overall growth. And I think there are measures, as Sadia also touched on, it's skills, it's the digital divide. If we don't take seriously now the growing inequalities, 150 million people maybe end up in extreme poverty for the first time in 2 decades. We see poverty again growing. We will create new challenges down the road. So we need growth. It has to be more inclusive. This is one of the strong messages from this year's report. We have to fight inequalities very seriously. If not, this is a major risk on the horizon, and also it will lead to increased fractures in our societies and feeding also populism and also protectionism and also easy solutions to very complex questions and challenges.
Thanks, Børge. Well, it's the end of our briefing. Big thank you to Carolina, to Peter, and to Guillaume for joining us as panelists. Thanks to Børge and Sadia for presenting the report here in Geneva, and our thanks to you for joining and taking time to be with us. We hope that you'll join us again from next Monday when we have a lineup of world leaders addressing some of the risks and challenges that this report outlines, but also some of the more immediate things on the global agenda. Until then, thank you from Geneva. See you later. Have a good rest of your day.